when you guys raised, I think, over $140 million looking at and pitching the voluntary market and saying there's projects out there that can create credits, which, much like you did with other resources or other commodities, you can sequester and hold for a period of time and then sell as they appreciate. But that's all built on the voluntary market. Now, can we get a bit into the difference between the carbon markets and then maybe even the difference between countries and their carbon markets, or nations, or regions?
Yeah, it's a very good question. So first off, when you think about a carbon credit, every carbon credit in the world, whether it's a regulated carbon credit or a voluntary carbon credit, we'll talk about the difference in a second, but every carbon credit in the world represents 1 metric ton of greenhouse gas emissions. So 2,200 pounds of greenhouse gas emissions, whether that's carbon or methane, nitrous oxide, other greenhouse gases, but of course the primary one being carbon. And so every credit represents 1 metric ton of carbon. And then that credit can really exist in 2 platforms. One, which we call the regulated market. And that market being regulated is generally some kind of cap and trade program or carbon tax program. And so what we mean by a cap and trade program is when a government or regulated entity forces, and I'll just use some examples here, a national power industry that has emissions of X, and the cap is reduced over time. So in order to meet your emission goals from the Paris Agreement, you're going to reduce that cap over time. So that cap is being reduced. Meanwhile, the trading element is if you're one of those regulated power emitters and you're emitting more than your cap, you have to go into the market to buy carbon credits. And vice versa, if you're one of those power emitters and are emitting less than your cap, well, then now you have available credits that you can sell to one of those companies that's over its cap. And so then every power emitter in that country, as an example, would have a cap that again reduces over time. And so within that market, those carbon credits trade and are fungible and can be traded between entities, and a market price is set. We have over 60 different compliance regulated programs around the world. By far the largest is the EU emission trading system, and that is the European Union's cap and trade program, where they're regulating emissions across the power sector and other industries. That is last year traded over $800 billion in carbon credits. So massive,
the amount market of money that is moved between the ones who are emitters and those who have a surplus effectively is crazy. It's a lot of money.
It's crazy. Yeah. I mean, it's billions of dollars a day. So it is a massive, massive market. And some of those credits themselves are auctioned by governments to raise money to support green initiatives and green investing. And you get that really across the board. And so within those regulated programs, again, you have these cap and trade programs, or you have a carbon tax. And let's use Canada as a great example. Canada has employed so far a carbon tax program where the Liberal government has announced we've got a $50 carbon tax today. So if you're a regulated emitter in Canada, and again, this is mostly focused on the power sector, but moving towards oil and gas as well. If you're emitting carbon, you would have a $50 carbon tax, and that carbon tax is going up to $170 a ton or a credit by the end of this decade. So by 2030, that $50 price is increasing all the way. It's $15 a year for another couple of years, and then it's $10 a year after that, up to $170 by 2030.
And so that's, if I'm not mistaken, again, that's under this pan-Canadian approach to carbon, as I understand.
That's exactly it. It's a federal carbon pricing scheme, and there is within the Canadian program the ability for provinces to have their own regulated carbon program. So Alberta is a perfect example of that, as they have their own.
Given
Sorry, go ahead.
You know, within Canada where we are, what opportunities are there? What do you see there Is there something, given that mandate, what is the opportunity?
Yeah, what I love about that Canadian approach is you're putting a price on carbon, again, $50 per ton per credit today, going to $170 by the end of the decade. You're putting a price on carbon. So if you're then now a carbon project developer, so let's say you're developing a project to capture carbon, capture methane, whether it's from an agricultural project or heavy industry, or you're conserving a forest through improved forest management practices, or you're replanting a forest that was deforested for some reason, whether through a forest fire or mountain pine beetles or for logging. If you're able to find a project and invest and put capital to work to reduce emissions, well, then you get a carbon credit, and that carbon credit now is being given a value by the federal government that's, again, $50 a credit today, going to $170. So if I can sell that credit to that same regulated buyer who, if they don't buy the credit, have to pay a $50 tax, well, then you're sort of putting a ceiling on the value of that credit, and that's a tremendously high ceiling today. And so when we look at carbon prices internationally in this, what I call this voluntary market, the average price is probably about $10 a credit. So in Canada, we're putting a $50 price on that same credit. So it's encouraging the development of carbon projects in Canada. And why would the federal government want to do that? Of course, it then helps us reduce emissions and of course then meet our Paris Agreement commitments for reducing countrywide emissions. And so what you have now is governments around the world trying to do the same thing. They do it through carbon taxes or through these cap and trade programs, but they're all designed to help meet their Paris Agreement commitments, which we call NDC commitments, but naturally determined contributions, but meeting those countrywide commitments to reduce emissions.
So with that, with just in the markets in Canada, does that not open up effectively a big opportunity for what you're doing and these emitters, the oil and gas producers, the energy producers, to say, hey, we don't want to be paying $50 or $65 or $85, $80 a credit. We'd look to buy the ones that you have on in store. Is that not the where you're at, and they can get a discount?
That is absolutely the plan. The federal government is yet to finalize its federal offsite pricing scheme. The hope is that that's done later this year. And within that, there's sort of categories of projects: agricultural, methane capture, these improved forestry management projects that I talked about. And so those projects, once the federal program is approved, we would then look to sell credits under that scheme. Again, not finalized yet, but hope that it's finalized sometime soon.